Welcome back. The markets have been quiet this summer. Oh, not right now. That's changed. At the beginning of August, a lot going on. And here to help us understand why is certified financial planner professional Jim Lineweaver. Really a good morning to have you here. Everyone's talking about the trade war and the tariffs and that sort of thing. And people hardly understand that, much less what has happened as a result of that.
Yeah, there's a lot of volatility because back on August 1st, Trump actually reinitiated all his tariffs on $300 billion worth of goods coming from China. And so the market on the first dropped over 760 points. And then yesterday what he did is he said, okay, well, I'm going to take some of that back and we'll lift that tariff until December 15th on technology goods, computers, iPhones, things along that nature, and some toys. So the market was up almost 400 points yesterday.
You always deal with what's happening out there and make a reaction to it to help your clients, to help them. But sometimes you see some of these things happening. You pull your hair out when you see some of this going on?
No, we try to be proactive. Okay,
Yeah.
so the second half of July, we actually readjusted our clients' portfolios and took some off the table because the market was at a high. So you don't want to get greedy, and we keep clients' emotions out of the portfolio because we're expecting a lot of volatility. Just like this morning, everybody woke up. First time since 2005 that we have an inverted yield curve. What does that mean?
That's another thing. In the beginning, I'm asking you to help me because you're a professional, and then I see on my card it says inverted yield curve.
Yes.
Like, is that a baseball term?
No, I wish it was.
Yeah.
Because the market, it wasn't kind of the market today. So what happens, first time since 2005, the 2-year note is actually higher than the 10-year treasury. Okay, so that means that you can get a better rate on a 2-year investment than you can on 10. That's only ever happened 5 times since 1978. Every single time it's happened, within 18 to 22 months, we've been in a recession.
Yeah.
Okay. So if you wind back the clock to 2005 when it happened last, what happened?
The big recession.
Exactly. So by October of 2007, you hit the peak, and then you lost 50% in the following 2 years in the market.
Well, I listened to some other professionals on the radio today, like CNN or something like that, and they go like, yeah, but the guys say it might not be a problem. Might not is not a great way to make your plan, is it?
No, it's not. You'll be reactive then, and that's not the way you manage money. You got to try to be proactive. Nobody has a crystal ball, but you can recognize trends and try to help your clients and their portfolios to adjust to those trends ahead of time.
Who's the client out there who hasn't discovered you yet that should discover you? Like, is there a special age group or an income group or a group of people?
Well, everybody's money is always important to them, right?
Right.
But really, it's about getting your investments ready for retirement and that transition into retirement and then having a successful retirement. That's really where we specialize in helping people provide that kind of safety and security, if you will, to the best we can so that they can have a comfortable retirement.
What's the first step?
Well, what you really want to do is, especially in these volatile times, if you haven't addressed your portfolio, you don't know what's going on, call a financial advisor out there, preferably a certified financial planner, because they have all the credentials and everything behind the scenes. And you want to sit down with them and give them everything. Don't just give them a little piece.
Right.
Just like going to the doctor. You got to tell them everything so they can get a really good picture, understand all the financial, tax, legal, and insurance to make sure you're dotting your I's and crossing all your T's.
Somebody told me not too long ago, and boy, it was good advice. They say you should check your house insurance, your auto insurance, and all that kind of stuff every few years because it changes so much. You may be paying way too much money. So there's probably people out there with financial advisors. They've had like a relationship for years, but sometimes the perspective changes with new ideas, right?
It does, and also not only the market evolves, your situation evolves.
You got to make some changes sometimes.
And you also really want to peel back the layer to see what kind of fees and expenses you're really paying, and also how does that ramification trickle over to your taxes? Because you could have the best returns in the world, but if you lose them all to taxes, what good did it do you?
What was your first reaction when you heard this happen for the first time since the Great Recession?
Well, we had a feeling we knew volatility was coming. We didn't know in what fashion because we never know when Trump's going to tweet, right? But we knew volatility was coming, and therefore there's some hedges that you can put in place. And so it wasn't a big surprise, but we were already kind of ready for it.
So you don't run for the fire hose, you call Jim Lineweaver. That's what you do, right?
Good tip.
That's how you do it. So don't forget, you can learn more from Jim on his show. It's called The Financial Quarterback. That's Sunday mornings. What a great day for that, huh? Leading into the news with Chris Wallace. Natalie?